The key problem I have in Bitcoin is liquidity. That's what I show you in white. That is the Fed fund futures in 1 year, basically showing you when that kicks up, that means the Fed's going to start pivoting, the market starts pricing for it. Here's what's changed. The last two times we had pivots from the Fed, it was after Bitcoin swooned, after Bitcoin declined. No, the Fed doesn't care about Bitcoin, but it's a good leading indicator. Maybe Bitcoin or gold or treasury bonds are not risk assets, is when everybody gives up. And I didn't say if, it's just the way it's always happened in history after you have the biggest pump in liquidity ever. That's just in the early days of dumping. Let's remember this, M2 is still negative.
On October 2nd, Mike McGlone, commodity strategist at Bloomberg, took to social media X to express his concerns about the state of the crypto market. Despite Bitcoin's recent rise, McGlone highlighted a disturbing trend and raised the possibility of a cryptocurrency recession. Just as 10-year Treasury yields topped 4.70% for the first time since 2007 and the dollar built another head of steam, Fed officials stuck to their message that one more interest rate hike this year was still on the cards and rates wouldn't be coming down for some time after that. Bitcoin slid to around $27,600, giving up most of its gains from a short-lived rally above $28,000 at the start of the week as traders took profits as jitters in traditional financial markets weighed on cryptocurrency prices. McGlone's analysis suggests that the cryptocurrency market may face significant headwinds due to changing economic conditions, central bank policies, and potential liquidity challenges. There are clear indications of a recession across Europe, deteriorating growth in China, and ultimately the US. Typically, the global economy is going into a potential recession. A pump in liquidity followed by eased interest rates, with the Fed expected to pivot in 2024 and embrace a softer approach, Bitcoin price is likely to fall. Drawing historical parallels, McGlone mentioned the swoons in Bitcoin's price preceding Federal Reserve pivots, implying that cryptocurrencies could serve as leading indicators for broader market liquidity. McGlone suggested that a revival of liquidity may be necessary to support the crypto market. Now, let's direct our attention towards the few clips from interview.
Here's one thing I want to point out in a broader market in terms of, you take the Russell 2000 to its small caps, it's bouncing right on, almost tilting over down on the year, just about there. And if you overlay that with the Bloomberg crypto index, it's been way underperforming. The cryptos have been way underperforming just the stock market since the peak in 2017 and most recently. But now they're both kind of hovering at this level and it's both tilting lower. And that's the key thing I'm worried about. And this is what I'll end with, is my morning thing. I just want to show it a few charts. Is this came out from our economics team on Sunday. And it's completely counter to what most people were thinking 6 months ago. And this is our economics team has remained steadfast, as I have, that this recession is going to be a great reset. Now they're starting, everybody kind of gave up on it. They never did. Now they're starting to tilt over. Yes, it might be as bad as some people think, even though the Fed thinks it's going to be a soft landing. So to me, that's where I want to end with. And to me, that's where the macro is so important, is if the stock market drops, so a normal recession, it'd be wonderful. So for Bitcoin not to fall, right now it's showing divergent strength. That's great. But if we get the normal 30-40% correction, risk assets go down and Bitcoin's one of the riskiest back. Let me the market tell you. And that's what I'm pointing out here, is if it can at least sustain, a day like today is great. What we've seen in the last 2 weeks is great. What we've seen in Q3 is not good, because Bitcoin was the first one to go down. Now look, stock market's rolling over and following it. Yeah, Bitcoin's bouncing a little bit. I get it. But absolutely, that's every day you look at this. So this is what I keep things showing here, is if Bitcoin can show divergent strength versus negative liquidity and the stock market going down, there you have Dave's thesis kicking in. It's going to kick in someday, but so far this year, let's remember what's happened. All risk assets went down last year. All risk assets have gone up this year. Bitcoin has started going down before the other ones have. Yes, it's bounced the last few days. That's the fact of what's happening. So absolutely, that's where we're going. But it's the key thing. I want to put some levels on this without just trying to be the doom and gloom guy. Let's take a talk about, and to me, not only this is not doom and gloom. This is from someone who spent his whole life on the phones with clients and running money. And this is an awesome opportunity for people who trade, who manage money, who are not just, I've been long for the last 10 years and I buy every dip. That's what's going to change. And that's why I'm going to show one more chart. I want to point out, this is the key thing, putting some numbers on it. I overlay here, it's again my main liquidity thing, Fed fund futures a year from now. Can't emphasize that enough. When that keeps going down, that's price going down, it means they're not going to provide that liquidity. What's the number one rule in markets? It's liquidity. What's the key thing that's kept the stock market going up for the last 50 years? Every time it goes down, the Fed would ease. Here's a simple measure of what's happened since 2015. If you overlay the S&P 500 with copper, just take the S&P 500, divide by 1,000. It's the same price as the dollar price of copper. Copper is going to 3, in my view, in a normal global contraction. It's happening in China, it's happening in Europe, it's happening here, and we're still hiking rates. That means to me, simplistically, S&P 500 should go back to 3,000. Now, for people who've traded for the last 10 years, that's a big deal. For people who've traded for 20 or 30 years, that's normal correction in a recession we haven't seen kick in since 2008. It's just the way things work.
In the interview, McGlone expressed agreement with the anticipation of a significant deflationary scenario. There is still a surplus of M2 money, but it is shrinking every month. Higher interest rates have boosted the demand for money, in effect neutralizing the declining M2 surplus. Inflation is not driving interest rates higher, but the Fed is. During the second quarter of this year, prices throughout the economy rose at a mere 1.7% rate, well below the Fed's professed target. In his tweet, Mike said, "Cryptos might be leaning into recession. The biggest risk for cryptos may be the pressure of an ebbing tide should the stock market have a typical drawdown for a #recession." As per McGlone's assessment, the Federal Reserve is expected to raise interest rates by the end of this year, targeting an approximate rate of 5.46%, in contrast to the current effective rate of 5.33%. Now, let's direct our attention towards the few clips from interview.
I'm expecting severe deflation, which is a normal situation after you have a massive spike in M2 like we did. This is M2 money supply. Mm-hmm. And also I overlay this on the same scale with PPI. Now here's a fact about PPI, the Producer Price Index. It's basically synonymous economies with commodities. The high from 2008 was plus 9.9%, so about 10%. You know what the low is this year? Minus 3.1. That's tilting towards deflation because the plateau is so high now. Like the average home, we talked about this last week. A home average is around 400. Before a couple of years ago, it was 200. Now there's only a lot of room for that to go down, which shows deflation. And to me, that's the main thing that's going to be happening, is kicking up to normal deflationary trends. And there's one thing I also want to show is there's a big problem with alts. What I show you in white is just this is the market vector digital digital assets 100 small cap index divided by Bitcoin. I mean, it's just trading lower. That makes sense. I mean, Bitcoin's the benchmark crypto. But what is he overlay with liquidity from Fed funds? It's heading lower. The key thing I'm worried about is what happens if the stock market takes that lead and heads lower. This is why Bitcoin was born. It was born in this environment. That's why I'm worried. This is where all cryptos were born. And that's what we all agree on. Most of those 30,000 cryptos are probably, they might not go to zero, but they've got a lot to still give up. And sorry about people holding their bags. What did you buy and why? You bought it for speculation. Come on, we all know that. But this to me is what's happening. All we're going to do is go back to normal. We have always over history, go back to parity with GDP, and it's going to seem horrible. But key thing is right now, there's nothing to stop it. Fiscal spending is already given up. We've hit diminishing returns. The Fed is still tightening, and they said they'll keep tightening. And guess what? You know what they're going to stop tightening? Probably when we start heading towards. So right now, Fed fund futures are priced for 32% chance that they'll hike by the end of this year. 5.46 is the rate expected from futures versus effective rate of 5.33. That's my point, is the Fed, the monetary phenomena is still reducing that liquidity, which is deflationary. And until that spigot gets turned back on, we should expect risk assets to continue to decline. You can see that obviously in broad cryptos, particularly today. Like every other one, nothing's up like Bitcoin is. So maybe Bitcoin's finally doing that digital gold thing. But this to me is the number one thing we have to, let's at least get past this before we can start talking about inflation. The Fed has still got his hammer on that button, which is the number one thing in history, is to push back on money supply. I mean, just reducing that supply of money, which we pumped up too much in the last 3 years.
Investors are worried that soaring yields on U.S. government bonds are giving signals for a recession in the near future. With signs of a global recession looming, a historical pattern suggests that Bitcoin's price may decline ahead of Federal Reserve policy shifts, making cryptocurrencies potential leading indicators for broader market liquidity. That wraps up our discussion for today. Feel free to share your thoughts in the comment section below. If you find this content informative, do not forget to give a thumbs up and hit the subscribe button for latest updates. Thanks for joining us.